One of the biggest stories we're seeing play out over the course of this earnings season is the lack of momentum we're seeing in momentum stocks, the profit taking we're seeing against the news and the reactions to shortfalls. And what's triggered me onto this, I've been noticing it quite a bit lately, but in particular was today's reaction to the Facebook news. When you get a momentum company that's trading at a high PE valuation, that means that, and particularly relative to, it means this needs very strong growth to support it, because generally speaking, you look at your PE should be similar to your growth rate. High PEs can only be justified by high growth. So if you have momentum stocks with no momentum, you've got a big problem. And that's what we're starting to see play out in Facebook and a number of other stocks as we move through this earnings season. Today we've seen for most of the last year and a half, Facebook's been going up and up and up, very steady uptrend, and then kaboom. Today was just look at this huge breakaway gap down, huge plunge in the RSI, and a big rollover. So what happened to Facebook? What happened was, and their headline earnings were absolutely spectacular. What happened though? The company's outlook and guidance. And always important to remember when we look at these things, forward guidance trumps past earnings every time in the stock market, or most times anyways. It's far more important. Guidance is key. Stock markets are a forward-looking vehicle, not backward looking. So the backward earnings are nice, but only if they're a suggestion that this may continue in future. Facebook's management comes out and has hinted that this might not be the case. They said that going forward, advertising might not be as big a revenue driver. They might have to find other areas to drive their revenue. And the second thing was, generally speaking, also they think their sales growth could slow. That is the kiss of death for fast money and for momentum investors. That sends them screaming and running the other way, and that's what we've seen in Facebook stock action today. And that is why we're seeing it down, even though the headline earnings results were absolutely fantastic. Going forward also, they started calling 2017 an investment year. That means costs are going to increase. Likely also, and if sales growth slows and costs go up, you're likely to see earnings and margins get crunched as well. So that's why we're seeing this downturn in Facebook. But generally speaking, even in companies that have reported fairly decent results, we're still seeing this slowdown in momentum. We're still seeing profit taking against the news. It's a lot of the tech stocks and momentum plays are starting to look tired. And I'll just bring up a few examples here. We'll take a look at Apple. Apple had a pretty good earnings report overall. I guess there's still some concern out there about what might happen with the iPhone 7, but at the same time, you'd think Apple would be getting a tailwind from the struggles that Samsung is having. Still, since its earnings gap down, Apple's been trending lower since its earnings report. One of the big ones today, look at this, First Solar getting hammered for 17.5%. This is what happens when development stage companies don't deliver. Even though this is a stock that's already been hammered for much of the year, even still, you'd think expectations would be low for this stock. Nope, missed again. Kaboom. Look at these stocks getting hammered right on the open. Even Tesla Motors, who had come out with a fairly good earnings report, their stock's down. In fact, their stock's been trending lower for much of the year as well. And it looks like it's about to bust through the bottom of this big descending triangle here. We've also even got Amazon. Amazon was another one that missed and suggests growth could be not as strong as people had suggested. Double top, breakaway gap downward. Even Amazon is sinking here. And there's even a couple more names just to highlight here. We've got Google. Google, same sort of thing. Not that long ago, good results had been peaked up here, up above the $800 level. Couldn't hold it. We're starting to slide back in Google. And even Netflix, which was one that did deliver and has been showing strong growth, even that has started to roll over as well. Now, the stock had been extremely overbought, but we are starting to see backing and filling in this one as well. So a lot of the momentum plays in the market are starting to lose momentum. What's that telling us? That's telling us that markets are coming under distribution and they're looking vulnerable heading into the U.S. election.